Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Some recovery from the lows in the Nifty. It's up 27 points and building onto those gains as well. So we'll be tracking that for you. Started on the back foot, but now we are making some inroads.
Well, that's right. All of the worries that we have over the economic data that came in, post-market on Friday, market seems to have digested that, and it seems to be quite a bit of a recovery, like you mentioned. Mid-cap, small-cap index trading slightly higher compared to the benchmarks, but quite a lot lined up on the show. Let's start off with the top headlines. Stocks swing between losses and gains and subdued trade amid signs of slowing growth and uncertainty over Trump 2.0 policies. Realty and consumer durables climb, while PSU banks and private banks drag. Mid-caps eke out gains.
Dixon Tech is up nearly 5% after it begins production of Google Pixel at its Noida plant. Brokerage house Nomura issues a buy rating and sets the target price at 18,654 rupees a share.
Ola Electric gains in trade after company announces its plans of expanding from 800 to 4,000 stores this month. In a separate development, promoter Bhavish Agarwal announces he will create a pledge on 1.1% equity of the company.
C Info Systems under pressure after its promoter floats a new venture which will focus on B2C business. CEO and ED Rohan Verma will relinquish his executive responsibilities but will continue as non-executive director effective April 1st, 2025. Stock is down over 3%.
Home First Finance is down nearly 4% in trade after over 9% equity changes hands in the block deal window at 990 rupees a share. Sources tell CNBC-TV18 that True North Fund, Warburg Pincus and Arthur Mauritius are the likely private equity sellers in this block.
Okay, all right, those are the top headlines for the Nifty. If we look at those numbers, it's a 30-point uptick right now. When we were just starting the show, it was an uptick of around 2 points. So clearly there is some buying that we are seeing, but we'll have to see which way things go for now, because after that recovery, we have been consolidating around the 24,150 mark for the longest time. Mid-caps are doing well, 0.6% higher there. So mid-caps are the ones which are outperforming in a market like that this today. The small-cap index also is doing well. It's 0.8% higher. So small caps are actually outperforming the mid caps as well. Nifty Realty, Nifty Pharma, Nifty Autos on the back of these monthly data that we've been getting. All these indices are higher. And if we talk about what is not doing so well, it's the PSU banking or the Nifty banking index that is not contributing to the recovery that we are seeing today. But this is not something, actually this is better than what the bulls were fearing after the GDP data.
Absolutely right. They're expecting a very sharp gap down, and they expected further selling pressure, but that's not what transpired. The market bet, in fact, is quite strong, given the fact that the broader end of the market, like you mentioned, the mid cap and the small cap part of the indices are actually doing much better. But moving on, this is our special segment, Mid Cap Movers. Hormaz is standing by the wall. He'll take us to the mid caps that are moving around in the session.
There's a competition between the mid-caps and the small-caps as to who will do better by the end of the trading session. But the bulls would like the fact that both of them are in the green as we speak. So we'll start off with some of the gainers then within the broader market space, and there are plenty of them. Dixon Technologies, another positive brokerage note coming in. Inox Wind surging almost 6% on the back of strong volume. Similar gains seen in Castrol India as well. And Swan Energy is among the top gainers in today's trading session within the broader markets. Mid-cap IT is seeing a lot of buying interest in today's session. You can attribute that partly to the depreciation of the rupee as well. Ramco Systems is up 15%. Axis Cades, after the announcement they made this morning, is up 5.5%. Happiest Minds is up almost 7%. And Oracle Financial continues to move higher, 3.5% higher in today's session as well. Some of the other stocks that are doing well in today's trading session are the pharma names. And they continue from where they left off on Friday, be it Natco, Marksons, Biocon, all of them doing well for themselves in today's trading session. Gains of anywhere between 2 to 5%. On the volume front, stocks that are doing well and not so well as well on the back of very heavy volumes. Torrent Power on the green side. Aegis Logistics is at the lowest point of the day, among the top losers on the Nifty 500, as is BASF. Both of them seeing losses of 6 to 8% on very strong volumes in today's trading session. And lastly, a sector that has been outperforming in today's session is the cement pack, and that is Mangalam Cement. All of them seeing gains of anywhere, particularly the mid-cap cement stocks, seeing gains of anywhere between 3 to 5%. Back to you guys.
All right, some interesting names. The cement space definitely is buzzing, and we'll put spotlight on that in our special segment today. Well, thank you so much, Hormaz, for joining in with those names. So those are the mid-cap movers. It's a good time to welcome Ruchit Jain from Motilal Oswal Financial Services for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining in. Well, this recovery that we're seeing from the lows, more legs to it. Do you think we'll see higher levels in today's trading session itself?
Yeah, hi, very good afternoon to both of you. Well, we have seen that post the recent price-wise correction, and the market somewhere have entered a time-wise corrective phase where 24,000, 23,850 has become a support base. And I think the kind of momentum has been seen in the broader markets where the Nifty mid-cap index has taken a support around its 200 EMA and the market breadth is positive. So this indicates that this is a pullback move which we are going through. We expect the index to head towards 24,300 to 350. But that 20 EMA has been acting as a hurdle in this recent corrective phase. So more or less, it seems that the index has entered some time-wise corrective phase after the price-wise correction that we have seen recently. But yes, the stock-specific momentum is good. The market breadth is positive. So I think focusing on a stock-specific approach should be a good approach in this market.
Ruchit, so you say a stock-specific approach is what one should look at. So which are the stocks that you're recommending today?
So a couple of names from the market, broader markets. One is the DV's Lab we are recommending to go long on. So we have seen that the stock has taken a good support around, has seen a good consolidation phase recently, and it's showing signs of a breakout from this consolidation. And even when the broader markets were correcting recently, the stock has shown a good relative outperformance. So DV's is one stock where we should see a resumption of the uptrend. So short-term traders can go long with stock below 59.70 for potential targets around 6650. And FL India is another stock which we are recommending to go long on. A similar consolidation breakout has been seen over here. Well, the volumes are good along with a price up move. And again, a bullish flag type of pattern has been formed technically. So this is one stock which one can go long with stock below 1600 for potential targets around 1800.
Okay, all right. Ruchit, thank you so much for joining in. So those are some technical picks coming in. Apple India is up around 4%. We'll slip into a short break. When we come back, we'll talk about a lot of stock-specific action that has been happening in the broader market. Stay tuned for that.
CNBC over the years has played a very important role in communicating what is happening in India, what is happening across the world, to people interested in the economy, to investors, all stakeholders of the financial world. And I think this role of playing a bridge between reality and international situation and making investors informed investors is truly a commendable contribution. 25 years is a long period of time. The credibility that CNBC-TV18 has gained in these 25 years truly makes all of us proud and helps also have a very organized growth of the economy.
Welcome back to Mid-Cap Radar. Well, one particular set of stocks that are doing very well is the entire cement pack. Nigel is here, and this is our special segment, Mid-Cap Spotlight. Nigel will focus on the cement sector today and what is driving stocks higher today.
Well, that's right. Jefferies has come out with a note, and they're making various positives on three parameters. One is on pricing, then is on demand, and then is on input cost. Let's start off with the first point. They're saying that prices in the month of November, they were flattish on a month-on-month basis, which is not such a bad outcome because remember, pricing has been very, very weak. They make this point that the average pricing in Q3 so far is up by close to around 1.5% to around 2% in comparison to the previous quarter. They also say that as of now, the price hikes actually have been lacking what they are estimating, but we'll have to see price increases from here on to meet their estimates on the pricing front. The good news, though, is that dealer interaction suggests that pricing has bottomed out. And they're not ruling out a 10 to around 15 rupee price hike in the month of December itself, which will be very, very interesting given that in various parts of the country, there will be winters that will play out. Point number two, on cement demand, they are penciling 8 to around 10% year-on-year growth in the second half of the year, which compares with more or less a flattish number in the first half of the year. So though they're expecting a recovery in the second half that will be backed by government spending, they're saying that as of October as well as November, well, they are behind the line in terms of behind the run rate that is required to achieve this 8 to around 10%. And point number 3, in terms of cost trends, they're saying pet coke prices, well, in November, they moved up a little bit on a month-on-month basis, but they remain below $100 per ton, which is the average that we saw until September. And for quarter 3, if you compare it with the previous quarter as well as the previous year, well, the average pricing is much, much lower. So on the input side as well, there is some relief. The valuations come up for you on the screen. The large cap names first up, Ultratech, Shree, as JK, as well as Ramco. All of them up for you on the screen. While the mid cap names as well, a mid to relatively large cap like Dalmia, Novoco, Heidelberg, Birla, they trade at sub-replacement cost. So Jefferies is giving a bit of an optimistic sign for the cement industry. But we had with us Mr. Anil Singhvi of Shree Digvijay Cement. He wasn't so optimistic. He said that demand on ground is still weak. He needs to see measures with regard to the government of India as well as private capex that will pick up to see a good amount of boost. And he's factoring in only around a 3 to 4% cement demand growth on an average for the year. So he didn't sound very, very optimistic. So for the time being, the street believes that maybe things will get better from here on, which explains why the stocks are doing well. Back to you.
Right, that explains the move that we are seeing in the space today. Thank you so much for joining us today, Nigel, and explaining all of that to us. So that's one space that is doing well. The other stock that is doing well is Anantraj. This is on the back of an initiating coverage note that has come by from MK. They have initiated coverage with a buy rating and a target price of 925 rupees a share, which is an upside of around 37% from Friday's market price. Now, they say that company has gained strong brand name in the NCR market in the last 5 decades. And it is a strong player in the NCR market, which does have other peers, bigger peers like Godrej Properties, DLF, etc. as well. Now, launch pipeline is strong. That would lead to a CAGR of 18% in terms of bookings and CAGR of 39% in terms of collections. This is over FY25 4 to FY27. The next thing that they like is, and something that the entire street has been bullish on for a long time, is their data center business. They've done a fundraise of 2,000 crore rupees, and this would lead to a sharp ramp up in the data center business, where they are expecting an internal rate of return of around 21%. So that's a big number in terms of returns that they're expecting here, and data center has been doing well. Every other company has been bullish on the space. That is something that MK also seems to like. So this is Anantraj, which is doing well. The stock is up around 4.5%, Vivek.
So that explains the move in Anantraj. A lot of the gas companies too today are doing quite well. IGL is up almost 4.5%. MGL is up too. But I believe right now your focus is on Gujarat Gas. What's the news here?
Yes, so Gujarat Gas is in focus. It is flat, but with some positive bias, because after MGL and IGL, this company has also gone ahead and increased CNG prices. This is after that cut in APM gas allocation that had come by. This time around, the price hike is 1.5 rupees per kg to 77.76 rupees per kg. And Gujarat Gas officials are saying that there are no plans to hike gas prices for industrial users. Anyway, it does not impact any change in APM gas allocation, would not impact industrial users, because that's where they use spot LNG. So it's not something that would impact that part of their portfolio anyway. But this price hike is to the tune of around 2%, and Gujarat Gas needs a hike of around 8 to 10%. So still more legs or more space to pass on those price hikes. But looks like the other players, the company has not given full price hike. It would impact volumes for sure. And we do need more details in terms of what happens when April 1st comes up. You'll have newer APM gas prices as well. So a lot depends on that as well. But for now, this is a slight
move
positive.
Largely to protect margins by all three players?
Yes, of course.
Yeah.
They have to do that. That was given. They have to do that to protect their margins. But still, they'll need much more to hike prices in order to at least level to those margins. Quarter 3, as expected, is going to be weak in terms of margins for these companies.
Thank you so much, Sonal, for explaining the entire gas space in detail. But we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Well, a lot of stocks that we've been talking about, and MapMy India is definitely one of them, is under pressure. The promoters floated a new venture and very interesting internals as well. Rima is joining us with more details on this and what it would mean for the listed entity. Rima?
Thanks so much for that. So first, let's get you the news. Now, the company's promoter has floated a new venture which will focus on the B2C business. And Rohan Verma, who's currently the CEO and Executive Director of MapMy India, will relinquish his existing executive duties in MapMy India, and he will continue as a non-executive director. So no longer running the show, but he will be a part of the company in a non-executive capacity from 1st of April 2025. Now, there are perhaps two or three reasons why MapMy India stock is under pressure. One, because the current CEO and MD of the company is no longer going to be running the show, and he was the face of the the company. Secondly, there is always concern about related party transactions, because the way the new venture has been floated is that 90% of the new company will be held by Rohan Verma in his personal capacity, while the 10% will be held by MapMy India, the listed company, and they will do so by subscribing to 35 crore worth of CCDs in the new company. So that's reason number two. And thirdly, the new venture will continue to hold the brand name of Mappers, which is the retail brand name of MapMy India. In fact, both the entities will be holding on to that, the Mappers brand. So I think that could be also an added area of concerns. There is an investor call scheduled at 5 p.m. So we will get greater clarity on, how the promoter thinks about all these three things that we highlighted. Back to you.
Thank you so much for that, Rima. Very interesting development there at MapMy India, CE Infosystems. Well, one particular stock today that's on our radar is Home First Finance. There was a very large block deal that happened, in the block deal window. We had access to the term sheet, post market hours on Friday. And as per the term sheet, the actual size of the block was expected to be close to 14.7% stake, with two large private equity investors, both True North Fund as well as Warburg Pincus, looking to exit part of their stake. But as per what the data indicates today, it appears as though close to 10% of the total equity has actually changed hands. Now remember, the deal price was at close to 8% discount to the last closing price, or the closing price on Friday. So the deal floor price was close to 968 rupees a share. Today's actual deal took place closer to 990 rupees a share. There has been quite a bit of a sharp recovery in the share price post the block deal, and the stock, in fact, trading near the highest point of the day. But let's have a look at the private equity investor holding as far as Home First is concerned. True North held close to 14.1% stake in the company. Warburg Pincus, that's Orange Globe, under the name of Orange Globe, held close to 22.91% stake in the company. And Aether Mauritius held close to 9.31% stake at the end of Q2. Now, what is going to be interesting is, what do the actual Ps do post this particular block deal? Do they hold on, or will they be looking to sell further stake? And that'll be the key question. As of right now, bit of an overhang as far as Home First is concerned.
Okay, and there's a sharp recovery in the stock as well from the lows. It's up around 1.3%, but that's what the news piece is on Home First Finance. Thank you, Vic, for making sense of the moves that we've been seeing there. But with that, we'll wrap on this edition of Midcap Radar with the news that the markets are deep in the green now, actually. Recovered quite a bit from the lows, 45 points higher on the Nifty. Midcaps are up 320 points. The Bank Nifty, though, is not contributing to the gains as we speak. We'll take your leave. Your stocks when you return.